All right. Good morning, everybody. Let me see. Cameras are set up, so we're good here. Can everyone hear me okay? Just quickly double. Yep. Sounds like we're good there. Perfect. Okay. I would say let's get started. Again, good morning, everyone. Serge Berger here from thestudytrader.com. This is our Set the Market morning call. So we're going to spend the next 10 to 15 minutes going through our some things in our on our notepad here. I've got several things I'd like to highlight. We had a lot of people comment yesterday on our Bitcoin versus gold chart, so I kind of want to start there again. If you're here for the first time, please be sure to subscribe to our YouTube channel. It's free, but it allows you to be updated in real time when we go live with analysis such as this, when we have new podcasts, new charts, new ideas, new research, and so on and so forth. Also, please make sure to give us a thumbs up like on all the videos you watch, maybe even leave a comment. That would be very helpful. So let's get to it, and let's start off with the activity here so far this morning. If you look at your screens this morning, you'll notice a couple things. We've got further bid in some of the metals, so you can actually see gold just reached about $4,000 in the futures market. And, so that trade continues. The NASDAQ 100 is up another 30 basis points this morning. Another day, another opening, another trading session. So why not bid higher risk assets? We do expect at some point to get a bit of a pullback. It'll probably be quite sharp. Maybe only short, we don't know, we'll find out, but it'll probably be sharp. I think at this point, any pullback we'll see in risk assets will probably be quite sharp. It'll probably blow up a bunch of margin accounts. It doesn't require much right now. I think a 2, 3, 4% pullback would probably blow up a lot of people, given the leverage we're seeing. But I would expect normal volatility to give us a jolt at some point here this month. That's not a bearish comment. I still think risk assets are well bid and supported, but we shouldn't get too complacent in the short term. Which gets us to a couple of charts. So yesterday, the chart that I just referred to that we talked about is this one here. And unfortunately, I can only keep it kind of at the upper end of your screen. So if you just look up a little bit on this chart, you'll see two lines. The green/red line, it's the candlestick line, is essentially the price of gold, and then you've got the blue line, which is the price of Bitcoin, or you could use the IBIT ETF as a reference point as well. And what we are seeing is not only is there potential seasonality sort of tailwinds for Bitcoin, but also I think at this point of this pace of printing money, there is probably a reasonable expectation for something like Bitcoin to get a further bid here. And we could see the blue line catch up with the candlestick chart. Again, that's the red/green line. The question, of course, is always, what's your price target? I think it's a fair question, but it's the wrong question. What we're more concerned about is the trend. The longer-term trends remain intact. And then the short-term, we're more concerned about catching the momentum, because momentum in a lot of the market right now is momentum-driven, has been for years, and probably will continue to be so, both on the upside and on the downside. But just so I give you a number anyway, because I know that's all people want to hear, I do think 150,000 or so would catch us up with the price of gold. Whether that's, the business here for the fourth quarter or not, I don't know. But, I think the path of least resistance remains higher. If you look at something like Ethereum, and we can also look at this to the lens of the ETHA ETF, which just tracks Ethereum. This is, if all you do is look at technical analysis, I know a lot of people do, then you can kind of come up with some pictures that look a little bit like this. So let me quickly share this with you here. So we kind of make it look a little bit like this, and you can kind of imagine that this would ultimately resolve to the upside. So that's the chart that we showed yesterday, sort of this relative chart of the S&P, gold versus the price of Bitcoin. If you're wondering, in the short term, we did receive a new momentum buy signal from our trender momentum indicators. So for those of you guys that are using the trender, I hope you all do. The price of Bitcoin gave us a new momentum buy signal on the trender. That was at 118 and change. And of course, we went up to almost 126,000. Actually, we touched above 126,000 yesterday intraday, and we now have a trailing stop in place with this purple line. So that's all there. The other chart I would like to show people, since we're talking about sort of catch-up trades here for the fourth quarter, and again, I still do expect a volatility jolt at some point here in October. I think that would be expected. But another one that I like in the fourth quarter here, at least it looks attractive right now, is these two lines. What are these two lines? So you have the green line, which is essentially a set of commodity producing companies, and you can see they've had a pretty sharp rally starting in early April this year, and that continued basically since throughout the summer, let's put it this way. The price of oil, however, which is the blue line, which is lagging but has a high correlation to commodity producing company stocks, you can see is not only is it down since June, it's actually down about 12, 13, 14% year to date. This is WTI, right? West Texas Intermediate. And so what you are looking at is a potential spread that could begin to close, meaning basically the price of oil, the blue line, might go higher. Now, what would cause a spike in the price of oil? There are many things that could. Some of them are less pleasant than others. Some of that might be some sort of geopolitical thing, i.e., war-like scenarios. Of course, no one wants that, but we're looking at the chart here, and that's all we're really looking at is a trade. Obviously, we don't know where that's going to happen, but whatever. But the point is the spread between these two assets. That's really the only thing that matters here for this point of view. So I thought I would point it out. It's something that came up during an institutional call yesterday. So those are two things that I want to show you. The other thing that we have been talking about now for some time, and this is I think once again noteworthy here. This is a chart that continues to play out. You have at the bottom the S&P 500, so the regular S&P 500, the SPY ETF at the bottom. You can see it started breaking out in July of this year, and it's basically gone higher for the most part almost every week since. The more equally weighted S&P, which equal weights each stock and each sector, or each stock, I should say, it has largely failed to break out until just basically about a few days ago. And it's now starting to move higher. So we still think there's a much better value in the equally weighted S&P versus the regular S&P. This is something we thought we would point out so everyone can kind of see this. Last but not least, two single stock tickers. One of them is APP. This is a company called AppLovin. We've mentioned it here before. It's a momentum stock, and this is exactly the kind of name that we think is so important to understand. It's purely a momentum-driven situation. So if I were to show you, let me bring it up here, the stock of APP. So this is APP, AppLovin. I know a lot of people love it, no pun intended. But it is exactly why we use momentum signals for stocks like these. The stock had clocked yesterday down 14% on the day on the back of some investigations into its data collection model. And I'm sure that, probably didn't get too many people too excited about the prospects for further upside on that. So that's APP, and basically what you're looking at here, if I were to move this up a little bit so you guys can see the signals, the ticker symbol is APP, and you can see the momentum buy signal that we received is there. So it happened in July. The stock then rallied to, as much as 100 and something percent. And now we're getting a stop out signal. So it basically held what's called its stop loss trailing stop all along, and we're now finally seeing the stock, the trend or the momentum finally come to an end according to our model. So that's why we think for anyone that looks to trade, it's so important to understand that as a trader, you're mostly looking at momentum, right? Most people, unless they're looking for income-oriented strategies, which is more, it's a bit of a different thing, and we like to do that too. But for most part, people, when they're looking at the market, they're largely looking at momentum-based strategies on the more active side, on the more passive side. It's a bit more trends. But I would encourage everyone to have a model that not only finds them momentum signals, but also allows them to know exactly where to get out. So I have no reason to not believe my signal. It now would stop out at about a gain of 61%, and that's on top of the initial free profit target that was reached within a few days of the signal back in July. So that's another one. And then last but not least, I did want to show you Palladium, which is an ETF that we continue to really like. So Palladium obviously is a physical, it's a material. You can kind of Google what that's used for, but Palladium here, and I'm going to get rid of the moving average because it's really not helpful or not useful. But I think when you look at something like Palladium, we're probably still in the early stages of a much bigger move over the course of time. I don't think that's necessarily something that has to happen. I don't think that next leg higher has to happen. That meaningful next move has to happen. Immediately. But we are starting to see some of these things catch up with other assets like gold and so on and so forth. So, for example, if I were to just quickly overlay, and it's not the same thing, but just so you can kind of see, if I were to say overlay the price of silver to this, you could see that obviously the price of silver had in fact, let me try to overlay it a bit. So give me just 1 second. Let me try to make this a little bit more attractive so everyone can see this. So I'll have to kind of do it like this, right? So you can see while the price of silver has started essentially breaking out in April, right? So that would be let's say, this move here, right? The price of Palladium has not, right? So I wouldn't be surprised if that's one of those things that's going to start playing catch up. My colleague Christian is here with me as well, and he is just now putting in a link for tomorrow's educational session in our educational series, where we are going to be talking about major trend changes in assets that I think most people are still not allocated to, even though we've talked about it all year and then some. Among other things like Palladium, right? So these are incredibly important transitions. We call them sort of trend transitions or trend changes that we don't want to ignore, we don't want to miss. And so if you like to learn more about how we can allocate ourselves to major trends in the market that are changing, then I would encourage you to join us tomorrow in our sector shifts educational session. Again, it's tomorrow at Gosh, I don't know what time it is, but the link is in the chat box. Thank you, John. Yeah, John is reminding us to please, folks, give us a thumbs up, like on the video. It allows us to be able to continue to do the show. We will have to stop doing it at some point before long if we don't get more algos picking it up. I'm just fair warning. So please do give us a thumbs up, like, subscribe to the channel, because we're putting a lot of effort and research to basically give you a free resource here every single morning. I know a lot of people value it. Still way too few people are constantly, giving us thumbs up, like, and subscribing. So I'm just giving you a fair warning. Unless we see a change pretty soon, we're probably gonna have to shut this down. Just so you know. So please help us out. Let everyone know that you can to join us in the morning here. I know it's a lot of value. We're giving a lot of ideas and research. So if you could just give us a favor. Spread the word, thumbs up, like, and subscribe, and we'll see you guys back here tomorrow morning. And if you are an Inner Circle member, we'll see you in a few minutes with our morning session. Take care, and we'll see you guys back tomorrow.